And for everyone that doesn't convert, you just got free marketing. So that's a thing that we do.
The only time I would sell shorter terms is when a client would specifically tell me if I wanted to make it special, they're retiring in 9 years, 13 years, come out with a mortgage, customizable 13-year mortgage.
The day that they were getting sold to Bank of America in the heart of the financial crisis, I remember asking the guy during the interview, like, hey, how's this going to impact things?
Welcome to the show today. It's Ace with you here with Acez Academy, and today we got another show to you for one of a top originator that I just actually met a few days ago. And when I met this individual, I said I definitely want to bring him on the call. And strange story how I met this individual. So I was at Bradley's studio in Las Vegas, and I met somebody named Jay. And Jay does a Culture Matters podcast. And Jay's a very interesting guy. He thinks very deeply, and he's a good guy to talk to. He does consulting on the executive level for culture. And when I was talking to Jay, he asked me, what are some of the things you're focused on right now? And I was kind of explaining to him where I'm at with the academy and my consulting and, how I'm doing and the growth and what I've been struggling with and the opportunities. And I was really, explaining to him where I was at in my life. And I kind of told him, like, right now I was stuck in a little bubble. I got companies that I'm working with and they're expanding my time working with them. And I haven't really been able to get outside the bubble because he works with so many people in mortgages. And he was asking me, well, do you know this person? Do you know that person? And I told him, no, like 10, 15 no's in a row for 10, 15 people that supposedly have very big names in the mortgage industry. And he said, that's your problem. He said that, right now you're not really focused on networking. And that's one of the biggest things of business. You're just focused on the clientele you have. Anyways, I met him there at Bradley's studio. I left. Within 1 week, the guy gives me a 3-way call with like 15 different people. He's like, hey, Ace, I want you to meet Bill. Hey, Ace, I want you to meet Phil. Hey, Ace, I want you to meet this person. And he's calling me and just hooking me up with these people and just introducing me because he has a large network. He's done like about 400 podcasts, I believe. And when you think about custom value, he didn't have to do that. But the fact that he did that, now he calls me and he says, hey, I need you to write this article for a friend of mine. Hey, I want you to get on this podcast. And now he has the ability to ask me for favors or ask me for the business, as we say, because he provided custom value to me and went outside his comfort zone when he didn't have to. So I thought it was a relevant story because I'm always talking to you guys about, look, it's not just about the mortgage or just about the product or service you sell. It's about creating custom value and giving to people before asking for anything else in return. And I think he displayed a great job with that. Anyhow, so in this introduction, I meet somebody. His name is Bill Mervin, okay? And I look him up online and Jay's telling me about his brand and he does things a little differently in the mortgage industry. And I'm going to bring him on here and I'm going to read a little bit on his website about what they do. And then I'm going to pick his brain here live to see exactly how he does it. But I know that he does this at a very high level. He's very successful. He has a team. He's known in the industry and he does things a little differently. And the way he talks is kind of my style. So I want to bring him up here and allow him to go back and forth with you guys and me and see what he's doing and how business is going. So what's up, Bill?
How you doing?
Nice to see you in virtual reality. I'm just going to read this little part because I really like this. Our team is comprised of certified mortgage planners who take a holistic approach to the home loan consultation and cash flow planning. As opposed to just spitting out an interest rate and monthly payment, which by the way, Bill, I talk about all the time, we believe building a relationship and understanding a client's entire financial picture and long-term financial goals allow us to counsel, educate, and build a custom mortgage planning strategy. Our goal is for every client to make confident and well-educated home buying decisions. A solo loan officer's job ends when their clients are placed in debt. Our team feels that's where our job continues well beyond the day of settlement. Through our Customer for Life program, we proactively monitor your loan program for the entire time you're in the home and have quarterly and annual touch points to keep you informed throughout your whole process. I really like that because I believe that it should be a lifelong relationship. So before we jump into it, man, why don't you explain to us who you are, where you come from, how you got into mortgages?
Yeah, absolutely. So thanks again for having me on.
Of course.
I'm from outside of Philadelphia in Bucks County in Pennsylvania. I was in college and I was watching this late at night, this infomercial from this guy. His name's not important anymore, but he was this guy selling no money down real estate investing, Carlton Sheets. And it piqued my interest. I was delivering pizzas and going to college, and I bought the course on my credit card. And I never actually used any of it because it was all outdated stuff. But one of the things they talked about was just talking to bankers, talking to real estate folks, and it just got me into that world. A few years later, I started buying properties in Philadelphia, hard money and stuff like that. Had a pretty good system down. Dropped out of college because I thought I was the next big real estate developer, and I started doing that. I had a good run as a real estate investor. Definitely saw some challenges in 2006 through 8, but became a real estate agent in 2004 for like a year and a half, just to kind of go along at first with the real estate investing I was doing. And then in 2005, I was sending the deals over to a mortgage guy, and I was, talking to him, and I'm much more of a numbers person than I am, kind of guy that wants to open doors and do all the real estate agent stuff. So I got into mortgages in 2005. I had a brief hiatus in 2008 when things really, because I had a branch at that time, and back then you'd put all the branches in your name. I had just expanded from kind of small little like 2-person suites to like 3,000 square foot on a 3-year lease in my name. And then 2007 happened, so I ran and turned tail and ran away. But my skills only moved so far. So I got hired actually at Merrill Lynch the day that they were getting sold to Bank of America in the heart of the financial crisis. I remember asking the guy during the interview, like, hey, how's this going to impact things? And of course, they were still beating their chest and talking about how they were going to grow market share and all this.
Yeah.
Got my Series 7, my Series 66, and about 4 months in, they cut the whole program below like 2 years or a certain amount of assets under management. So spent like another year at Northwestern Mutual, doing some insurance, but still on the, financial side. And at that point, mortgages had stabilized a bit. And I said, look, I just traded one uncertainty for a different set of uncertainties. My heart was in mortgages. So in 2010, I jumped back in. But I had fallen in love with the financial markets. So I decided at that time to start working in that sort of model and that sort of approach into my mortgage lending. So just kind of got back into it for a few years. And then in 2013, jumped back into running a branch. Well, it's kind of gotten in vogue, the idea of teams and some people, being an advisor. That's really been our approach for about a decade now, and so that's really how we've kind of created what I call our mortgage practice, right? So, we talk about client for life, right? We talk about being, we try to work with a fair amount of financial advisors, and, we present it to them like, you're managing the asset side of the balance sheet and we're managing the liability side, right? And so I really embrace the role. It's not just a niche to create a difference, but I really believe the role of a mortgage planner is no different than a financial advisor or a good CPA or a good attorney, right? And helping folks make, wise decisions about one of the biggest, decisions of their life. So, that's kind of the nuts and bolts.
100%, man. I can respect that and appreciate it. I always say that, there's a lot of clients I talk them into buying real estate. They've never thought about real estate before. I talk them into investing. I talk them into opening that business they've always wanted. So I do look at us as advisors, and I always say advise over sell, educate over sell, and help somebody plan their life. Because when I do like a refinance, I'm pitching a 1 year, 3 year, and 5 year plan for the client. How many loan originators are doing that, So like, that's how you get the business for life. Now, your typical loan originator tells the client, yeah, we got a loan processing team. We're going to watch your loan. And when rates dip, we'll give you a call. How is what you do different than that?
Yeah. So, it starts from the first conversation with folks where we make them aware of a different perspective of what a mortgage advisor can be. Right. So it just starts with us explaining our process, explaining that, one of the things I say is that I really think that the 30 days we're under contract, most people focus on that and don't even always do that well. I think that that's like 10% of our job. Right. And maybe like 40% of our job is the planning and the preparation that we're doing to make smart decisions about the type of financing we're doing, the amount that we're putting down, how we're going to make our offer more attractive. And then I say probably 50% of my job is everything we're going to do after you close. Right. Because the loan that you're going to get on day one, most likely is not going to be the best loan, perhaps even a few years from now. right? And there's going to be decisions that we're going to be faced with about how we manage our mortgage debt moving forward. And we're going to be a part of that process for you. All right. So we do a post-closing call with every client. We do a 6-month check-in with every client. And then we do annual financial reviews and, what I kind of broadly call, mortgages under management, same way you might have assets under management, which is, so we'll identify in that first post-closing call, right? Based on their specific scenario, when might be some times that would be advantageous to refinance, or what sort of events might have to occur first before we start getting into a range where we might want to consider it. So that a lot of times when we get close to that, we're not calling and quote unquote reselling it. We've already written the script. We've already put the plan together and discussed it and gotten buy-in up front. So that next call is more just kind of like, hey, remember what we discussed? And we're around that target now. So we're going to get, we're going to re-app it, get the paperwork ready. Once it's together, we'll call them, we'll re-review things. And if it all still makes sense, we can pull the trigger. I might talk about, about preparation and how, for example, people think of like mortgage debt as like an unlimited pool of money, but we saw, and in theory, maybe there is in like the agency world, but like there's not unlimited capacity, right? And we saw that in 2020 and 21, right? Where I'm sure a lot of folks that may be watching this saw margins widen right out. It wasn't lenders being greedy. It was that they had to throttle out the margins in order to slow down the volume, because everybody was working 24 hours a day and paying $30,000 sign-on bonuses to good processors, right? So, if and when we ever hit another time where rates are really dropping and there's, an ideal time to refinance, we want to be the ones already at the front of the line, because we're not scrambling around trying to make the decision at that time. So we plant that seed from the very first call. We beat that drum throughout the upfront process. And then we really kind of set those expectations and the preliminary plan right from our post-closing call. We talk about how if rates drop a certain amount, we might look at a no-cost refinance to lock in some of the savings, right? And then, wait for them to go further. But if they don't go further, then we've at least locked in some savings. So we start kind of talking about those types of strategies from early in the process.
Got it. So instead of talking about just if rates drop, you're more focused on life events, things that they're planning, maybe kids, weddings, graduations, kids going off to college, retirement. You're more focused on life events.
I wouldn't even say more focused. I mean, we certainly talk about like how much the rates would need to drop based on the size of their loan. If it's a larger loan, we're kind of talking about how we might not need a 1% savings. If we get a 0.75% savings, but we're able to do a no-cost refinance, then, that could make sense to lock in some of those, because we don't have a crystal ball to know how low rates will go. So if it's a larger loan where the closing cost is a smaller percentage of the loan size, that becomes more opportune. But so we don't ignore that, right? It's certainly if we've got somebody with a average credit, certainly if we've got somebody with mortgage insurance, right? We're talking about how I kind of say, look, we got the wind at our back here with a potential refinance, because we've got the rate drop. And then also if we continue to work together to improve your credit, and we can flip you, for example, from FHA into conventional. And even if we haven't gotten 20% equity, we can do a MI buyout, right? Or a single premium MI, right? Now we're not only saving on the interest rate, but we're saving on the mortgage insurance. So I mean, that's a big part of it. But yes, sometimes I'll give an example of folks that, weren't sure about taking out debt for college and they had 22 years left on their mortgage, and we're able to get a minor drop in their interest rate, but take them back from 22 years to 30 years, which they were resistant at first, but just to kind of reshuffle that cash flow to then fund the kids through college rather than take out the debt, and then resume higher principal payments later on in order to kind of get it back to those original 22 years, but just kind of shuffling some of the money from early on to later on in the process. So yeah, there are life events, but I don't want to suggest that we don't talk about interest rates. But even with that, within interest rates, there's more to just, hey, rates drop, right? There's strategy, no cost refinance, mortgage insurance elimination or reduction. So there's lots of different ways to play that.
Got it. Now, generalizing it, if somebody's purchasing a house, would you agree or disagree that most of the time putting less down would be a better option than putting more down?
Almost always, in my opinion, right? I'm biased to this. But okay. I always give an example of this guy who I'll get them, not in a way to have a gotcha, right? But I'll be asking questions. Where are you getting the money from? I'm getting it from this investment account. Oh, yeah. How you been doing on that investment account? Oh, I've been killing it. I've been getting 10 to 12% a year on it, blah, 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 blah. Later on in the process, I'm putting 20% down. Let me challenge you a little bit. Where did you come up with that number? Well, I've got the money and, I don't want to pay mortgage insurance. It doesn't benefit me. It benefits the bank. Okay. I would propose perhaps that it doesn't just benefit the bank, that that it benefits you in the fact that it allows you to buy the house without putting 20% down. So let's talk about, you said you're getting the money from here. What's our capital gains going to be tapping out that money? So now we're going to pay capital gains. We're going to, lose an account that you've been saying yourself is getting 10 to 12% to avoid $140 worth of mortgage insurance. That doesn't quite seem like a good trade-off to me. So yeah, I mean, look, so you've got a conservative individual, right? So I don't like to have like absolutes. I'm not a fan of a 15-year, right? But you got somebody that's in a conservative point in their life. Maybe their accounts are just sitting in 4% or something super safe. That person might occasionally be somebody that just wants that peace of mind and is okay with that kind of, I call a 15-year mortgage a forced savings plan with a subpar rate of return, right? That's my view on it. But there's, of course, always situations where you don't want to be just kind of, one size fits all. But no, I'm a big believer for most folks. I had a guy, one more example. I had a guy recently say, I'm going to pay this off in 3 years. He was making a lot of money. Okay, great. You make $300,000. You're going to have $50,000 in mortgage interest, right? So you're going to be itemizing your deductions. You're at a 35% tax rate. You're at another X percent of tax rate in New Jersey. So you're going to be getting 40% of your mortgage interest back at tax time. That 7% interest rate is now 4%, right? So now you're going to pay off 7% debt, where your effective interest rate post-tax is 4%. And meanwhile, you can stick money in a money market account right now or a high yield savings account and get 4.5%. Maybe we want to reconsider that. That's being a debt advisor and not just selling rate.
If I play your recorded calls, man, you sound exactly the way I sound when I'm on the phone with clients. I call the 15-year the trainer in the gym. You need someone to hold you accountable. The only time I would sell shorter terms is when a client would specifically tell me if I wanted to make it special, they're retiring in 9 years, 13 years, come out with a mortgage, customizable 13-year mortgage with a debt consolidation, saving the money, and it's paid off as soon as they retire. Sometimes that made sense, and it was a good idea if their main goal was to be debt free. So that's the only time I would use it there. Do you work with financial advisors hand in hand, or you just work with the clients?
No, yeah. So I love financial advisors. We work with a number of them. I'd love it to be a bigger part of my business. Selfishly, right? I mean, they are the easiest. And I don't like to talk in these terms, but they're the easiest sell. I've had occasionally times where I start slipping into a little bit of a, again, I don't try to be a salesman, but let's face it, any job like this, there's an aspect of it. And I've had guys stop me right there and be like, Bill, you can save that. Mike's my guy. Mike said you're his guy. So just give me the advice and tell me what you want to do. So these people are paying individuals to give them advice. And so when you get a referral from a financial advisor at some of the stickiest clients, they don't work weekends. As a good friend of mine who works a lot of financial advisors says, so they're great. I'd love it to be a bigger percentage, but yes, I will get referrals from financial advisors. I'll always say, listen, while I try to take a holistic view and I try to look at the big picture, Mike, I'll just use him because he's one of my bigger financial advisor partners. He has everything, right? He's known you much longer. So when we come up with a strategy, with your permission, I'm going to make sure to loop him back in to make sure that we have consensus about the best way forward, right? So that I'm always doing stuff in alignment with the broader financial plan that the advisor is managing. So yes, that's how we try to approach those.
I worked with Charles Schwab for 2 years, so I worked with all financial advisors. That was the only thing I was doing. I was on the Charles Schwab team, and they would give me so many clients. I couldn't keep up. And the thing is, all you have to do is show them a high level of communication and just to be on the same wavelength as them. And if they respect it, they'll keep you forever. So that was fun times. I was asking earlier about the minimum down, because let's say somebody put minimum down and they got a rate. Let's say they bought down for some reason to a 5.25%, and the rates don't go back to 5.25% for a couple of years. When you call them in 6 months, you just tell them like, yeah, just keep on going along, or is there any other opportunity? Like if there's no rate reduction, do you just call them and check up and say, hey, we'll just check up in another 6 months? If there's no rate reduction and no equity.
Yeah. So, I mean, of course, those calls are going to be a little bit different, right? And again, selfishly, of course, we want we want as many calls as possible to be converting deals, but you can't manufacture them, right? So, those calls might be just kind of checking in and just checking in on where the market is on real estate, checking in on the direction of interest rates. We're not afraid to dig into like some of these folks. I've kind of modified this a little bit. We used to ask a series of questions a little deeper where we would look for opportunities to refer into estate planners or look to, potentially uncover insurance gaps or needs that these folks might not be considering. I'm kind of torn about it because on some level, I don't want to push myself too far into an area that isn't really my lane. And some of these folks aren't as receptive to it. But then, part of me is like, some of these individuals aren't going to get targeted by these types of people. And if we're not talking to them about it, then who is, right? So we certainly will look for, uncover opportunities if somebody, might have a need for a connection to a financial advisor, or, with what's going on with insurances lately, and, to have that reshopped, or if somebody might, have needs for an estate planner now that they've got some assets, presumably with the home.
Do you have your own like ecosystem that you ship them to, like as far as you have referral sources that you send, and then you get?
Yeah, I try to keep a tight list of some folks that I would refer to. And then again, of course, we're looking for, I refer to people not with the expectation of a referral. I refer to good people, just like I expect people to refer to me. But, when we find opportunities that we can refer into somebody that both is a good fit for the clients and also could reciprocate some business, we'll certainly look for that opportunity. Sometimes we uncover on those calls that they might be considering moving within the next year. Hey, great, let's plan it. Are you definitely committed to selling this home, or have you considered turning it into a rental property and starting a portfolio? I hadn't really considered that. I didn't know that we could do that. Great. Then we should go out and get a home equity line of credit now before you list, so that we have the funds to do that, because it's going to become more challenging. We need a bridge loan or something like that once we list the property, or it's going to be more expensive once it's an investment property. Most people in the mortgage business who do a very poor job of it, my goal is not to just be there when they're ready to make that next decision, right? If you do that, you'll be performing better than most of the people in this business. But if you're part of helping put them in the position and helping them analyze those next steps and decisions before they even get there, besides the fact that it's the right thing for clients, of course, you're going to be part of that transaction if you're the one that's kind of helped them see the future and be prepared for the future.
I had a presentation yesterday. One of the slides I was speaking at Rocket to 500 brokers, and one of the slides was being at the right place at the right time. And what I told them was, sometimes you need to create the right place at the right time. So you're actually creating that space, and you're doing it early, and you're prepping them for it, and you're guiding them and holding their hand and creating, and not just order taking. So it's a whole different kind of sale.
No, I was going to say that you were saying the same thing I'm saying in different terms.
Yes, that's why I like you a lot, man. I like you a lot. You're much respect. I could tell you're dangerous in the industry already just by talking to you for 15 minutes. And I actually had people on this show that pretty impressive, and you're on the top of that list. So credit triggers, I train broker shops that do credit triggers. Some of these broker shops, they go more towards refinance, and they kind of stay away from purchases because they're not too deep in purchases yet, and their tenure isn't there yet, I guess. And then they'll just pitch these people that call in and say like, yeah, I'm looking for a purchase. And then at first they're not even asking about the house they're in right now. So I get them to start asking about the house they're in right now. And then when they ask about the house they're in right now, yeah, we're going to sell it for the next house. And then like they still give up right there. Then I start taking headsets and showing them how, and one day I talked 3 clients from selling to renting and taking cash out, just like you're saying, to have the down payment for the next house and get ahead of the line and be prepared, and asking them where they're going to get the money for the next one and why are they selling, and did you know you could qualify for a second home? So like, so much opportunity in just talking about real estate, because everybody knows your money's better in a house right now than it is in the bank, especially with where the US dollar is going, and with the way Zillow and all these companies and billionaires are buying up neighborhoods and going public. You want to put your money in real estate right now, and this is what you need to be talking to clients about. So when people are saying like, this isn't the market to be successful, I'm like, all the reasons you think this isn't the market to be successful are the things you should be talking about on the phone that are going to make clients move, which makes it the market to be successful.
It's amazing. Yeah, what you just said. It's funny because a coach I've had in the business, one of his lines he always says is, the truth is the best script. And the fact of the matter is that it's not, besides the fact that it results in business, it's the right thing for the client, right? I invest in real estate. I invest in real estate because of all the reasons that you just mentioned, right? And that's another thing we'll get into with clients, right? We'll talk about, we'll dispel the misinformation from the talking heads and the clickbait articles of a real estate bubble and all these things. And I don't want to ramble on about it, but I talk about it. I was around in 2006 to 2008. Let me tell you why it's not the same at all, right? Inventory, 4 million homes for sale in that market. We've been around 1 million for 75% less. Housing, we overbuilt housing for a decade before that. Now we've had 13 years of below the long-term trend of housing. And that's, slowing down with the cost of inflation, labor and material. Demographics, right? At the same time we overbuilt, we had the smallest generation of first-time buyers at 2006, 2008. Now we've got all this pent-up demand, and we've got the largest generation since the baby boomers, and it's pretty close. So I want to, communicate that information to create a compelling reason of why to own real estate. And this, of course, transfers over to the individuals who are getting their heads kicked in on the buying their first home and getting ready to give up, in terms of communicating to them why they want to push forward with it, And so not only only is it a good idea because it creates a distinction between you and the order takers, right? And it gives you an edge. But the fact is, it's the truth, in my opinion. And I always tell people, listen, if I'm wrong, I'm going to be wrong right alongside you. Like, this is a strongly held conviction of mine. And the fact is that, if all you're going to do is just, get their credit, get their income, get their assets, and go along with what they say and give them what they ask for, then all you have to do is compete on price at that point in time. And that's not me. That's challenging folks, having those conversations, and the folks that don't receive that and they're like, oh, I've done this 5 times and can't get through to them. That's not my borrower, right? I'll let somebody else, drop their, proverbial drawers to win that deal. That's just not me. So I love it. I believe in it. And I think people can tell when you have conviction around it, and you can change people's lives by giving them a perspective that they're not getting with every other person that they just call and just pushes along whatever they're asking for.
All right. You ready for the speed dating section?
Yeah, let's do it.
All right. What's the most loans you close in a month?
I think like 21.
21. What are you closing right now on average, or your shop at least?
On average, about 9, but I did 13 last month.
And have you been keeping track of your book of business this whole time?
Yes. Yeah. Well, since about 2016, my database has been tight. It wasn't tight before that, and I vowed it would never happen again.
So is your leads just your book of business, or where else is your leads coming from?
I'm 100% self-sourced. So I'm about 50 to 60% realtor, maybe 20 to 30%, maybe right now less, about 15% financial advisor, and then sphere of influence and base.
Okay, I'm going to slow down the speed dating here because I talk to a lot of my companies and clients that have a sphere of influence, like financial advisors, realtors, clients, and I talk about custom value. I say it's no longer the days where you could just send a blast email to everybody. How do you provide custom value to these groups to keep them in the loop and keep you omnipresent to them? What kind of campaigns are you doing? Are you doing custom messages? Do you do every month, every 3 months? Do you have an automated system? What are you doing to keep all these people in your network and just keep reminding them, hey, I'm still here. Here's what's going on. Here's some value. Here's this. Here's that.
Well, we didn't really get into my team makeup, but so 2 things. One is I do a lot of video, right? I do video for just about everything. And I think you can, from some of these folks that might be doing more consumer direct, I mean, our overall units and volume might not seem that high for somebody that's doing that model, right? In our model where we're hunting for everything, they could be better, but those are decent.
Yeah, double digits and self-source is pretty good.
I think in this market, it's again, I'm not this market guy, but let's face it, the volume is down, right? But I do a lot of videos, right? So I do videos
on social.
I do Jay's been getting on me hellacious for not doing enough on social. So I do bomb. He's bomb.
Drop your handle, because I'm going to send this to like 30 shops, so they're going to watch it in the academy. It's recorded, so drop your handle.
I'd love that.
What is your handle? Let me drop it in here.
Yeah.
What's your handle on the what do you do? Instagram, Facebook?
Instagram, it's Bill Mervin team, and social media, I got Bill Mervin team, and I'm Bill Mervin. So yeah, no, I use BombBomb. So sometimes I'll send a video after we didn't really talk about my process. So first of all, my team, quickly, I've got 2 loan partners that are both licensed loan officers, also certified mortgage planners, could both be decent loan officers in their own right. One of them just does pre-approvals, and the other one he's my backup. He can talk in a more kind of the advisory language that I talk about. So when we've got bottlenecks or I'm away, he can step into my shoes, but the rest of the time he's out there doing that partner engagement, right? So he was just at an event yesterday, kind of picking up the mantle for us and speaking in front of a group. So to answer your question directly, a lot of the communication, stay in front of our partners. I really try to stay in process. So I'm very communicative and give a lot of updates and constantly staying in touch with our partners during that time. And then because I've got these other guys, I'm able to really focus on high level consultations and client interactions and some partner interactions. Mike on my team just does pre-approvals. So I do an intake call. We don't send them an app cold. They do the application. Mike reaches out, dots the I's and crosses the T's on the pre-approval. Once he knows that it's a solid pre-approval, he schedules them for a consultation. I do a consultation with every client over Zoom. It's usually 20 to 40 minutes. And at that point, they're not talking, they're not picking up your trigger lead calls or any of that stuff, because we've added so much value that everybody else just sounds like they're talking, gibberish at that point. Right. And then at contract, I do another consultation. Angelo on my team, he's the guy that will back me up when we've got bottlenecks or I'm away. And then his primary function is to stay in front of our partners regularly. So I always try to keep my finger on the button of what's the issue that's facing the partners that we work with, right? So with financial advisors, when rates were up and prices were up, we found a lot of them giving gifts to their kids to minimize those payments. We came up with a strategy to say, hey, listen, $100,000, instead of giving that kid $100,000 to lower the payment $700 a month, how about we keep that money invested and then we take a $700 a month distribution for a period of time and give it to the kids, which is the same as the payment offset you'd give by giving that 700,000. Now you get to keep that money invested, meet the same objective. You guys get to keep the assets under management. So we'll come up with something like that. We'll create a little presentation, and then he'll be primarily responsible for getting it in front of and articulating it to the partners we have. With real estate, it's been appraisal gap, right? It was the buy down when the buy downs were hot, whatever that kind of, and then it's solutions for contingent offers, right? And products we have to solve that. So whatever that hot button is for the markets we deal with, we try to create a solution, put together a presentation, and then Angela's job is the primary one to get that out in front of the partners we work with, to stay in front of them, not just staying in front of them like, hey, we're here, send us the business, but we're here right alongside of you, creating solutions to the problems in the market. So that's his role. And then I try to stay in front of our key partners, and then I do a lot of video. We do a decent amount of pickup from our listing agents and unaffiliated buyers agents when we have a sphere deal. There's no better way to get business if you really knock it out of the park, because we're fighting to get any attention from the realtors in particular. And for 30 days, they're forced to see us on stage and see what we can do, right? So if you're not just totally knocking out of the park, and I take a bit of what some might consider not terribly humble approach. We send a video with all of our offers. If you're not doing that, it's foolish. Most listing agents can't even get a mortgage guy on the phone when the offer goes in to ask him questions about the pre-approval. If you pick up the phone, that's great. But if you can reach out to them and proactively answer the questions that they're going to call to ask you, you've set the tone from the very beginning about why you're different. And for everyone that doesn't convert, you just got free marketing. So that's a thing that we do. And then I'll tell them right from the beginning, I'm looking forward to working with you. Hey, listen, I don't expect anything from you right now, but I'm going to just totally smash everything that you've seen from a mortgage lending standpoint. And I'm going to reach out to you after the process is over. And I'd love to talk to you about how I can do this and help some of your clients solve some problems. So some people get turned off. It's a little bit aggressive, but that's okay. I'm not for everybody. So that's really where I focus my business development efforts. And then Angelo tries to pick up new relationships and stay in front of the ones that we have.
Got it. And how often are you staying in front of them, you said?
I have few enough that we're able to create like an ABC kind of thing. So, I mean, I try to stay, every 2 weeks or monthly in front of our key agents, you know what I mean? And I'm talking, not just talking to them, but, I try to do some of my best relationships, two of my best relationships. One of them 7 years ago was a person part-time on a team, and I'll meet with her quarterly and go over like our plan for the next quarter. And I remember a couple of years ago, her talking, hey, I want to hire an admin this year. I want to hire a buyer's agent during one of our meetings. And she's followed through with all of it. And I would argue that when they're not just calling you about closing their loans, but they're like, hey, you've built a team. I'd like your advice on this, or how are you managing your leads? Or when they're asking you those types of questions, you've got them, right? Because now you're a true partner rather than just somebody closing their loans. So I don't know, some of them we just stay in front of once a month.
Now you're educating, advising, providing value outside of your product or service, creating friendships.
Yes. Yeah. In fact, I will say I've never been the happy hour guy. I probably am a little over the top with I've never wanted to be seen as the guy that's just out taking you out I don't drink, but taking you out for drinks or the party stuff. So because of that, I probably don't do enough of that, because let's face it, some people just work with people they like. I've always wanted to kind of bill myself as the kind of antithesis of that, right? Where I'm getting to talk about how we grow our business together, how we partner better together, how we help more folks. But I think I probably have blind spots to not doing enough of the Top Golf or just social events. But, I probably could do better with that.
Awesome. Have you ever bought lead buys, credit triggers, or anything like that?
No. And I am not for credit triggers. So
yeah,
I know that I'm probably not the right audience perhaps for that. But I sell really hard against it. So I don't think it would be authentic for me.
How about lead buys?
I use an example of, right, like if everybody in town tells you you go to this 5-star restaurant, right? And you got lots of great referrals and all. And then there's a guy standing out front of the 5-star restaurant with a Skittle saying, hey, before you walk in there, don't worry, I can cook you the same thing for cheaper. You'd probably laugh at them and walk right by them, right? So I sell very hard against trigger leads. And so I don't think that it would be authentic for me to.
You think lead buys are the same, or you think lead buys are a little different?
You know what? I think that that's an area that I'd like to broaden my horizons on, because no, I do not think lead buys are the same at all. I have a guy that's about a year and a half in that is, I didn't mention him, he's my dialer. So he does some of the like nurture calls. He does some of the like scheduling the post-closing calls and the annual reviews. And so I haven't really wanted to, because to do 13 loans in our model, we still need to talk to, 40, 50 people a month. Like I said, every person, I'm doing a 10-minute intake. I'm doing a 20 to 40 minute, pre-approval consultation. I'm doing another 20, 30-minute contract consultation. So it's pretty heavy to manufacture a loan with that level of touches.
It's a 5-star dinner. It's a first-class experience is what it sounds like.
Yeah. And I've been concerned that managing the leads along with that would then, clog up that channel. But I think my team's big enough at this point in time. And with this new guy, I've considered it. But because I've never been in that world, or at least I haven't been in that world since before 2013. But I think there's opportunity, and I think we could bring value to those folks. So that's maybe an area where somebody like you or folks in that world could kind of point me in some direction, because I have the bandwidth now with this younger guy to maybe do some of the pruning of those, so that by the time they get to me, they're kind of just like any of my other leads. But I've always been reluctant to create two separate channels, and the touches and all for a strongly referred, lead and those types of leads has always felt different. And I've toyed with it, but I've never been able to do it successfully.
Well, do you think there's missed opportunity right now in your book of business, like opportunity that you could be getting in front of?
Oh, absolutely.
That's where I'd probably step in and try to help. I try to squeeze out all those little things that are falling beneath the cracks and try to, juice the full value for you.
We're at, listen, we do, I think we're doing good, but I'm not, some would say great. I feel like we do good. And one thing that served me well is to never be satisfied. And so I've always done coaching. I've always looked inward. I've always looked to improve myself. And I'm certain there's missed opportunities. And I feel like we're a 25, 30 unit a month team with the chassis to do it. So I actually feel like we're underperforming. And so I'd welcome opportunities to improve.
Got it. What's one tip you have for everybody listening who's in mortgages or sales? One thing that's helped you, foundation for your success, helped you get to where you're at today?
I would say when I really took a leg up in the business was when I would say twofold, and it's becoming an expert in what you do, right? Because you can't get higher margins and do it in a way that, you're giving people value rather than taking from them if you're not a true professional, right? So any way that you can create a distinction, I use the example of commodity versus professional service, right? I go to dealer A, B, and C and get a new Toyota, and I'm going to get the same thing when I leave. So it's going to be whoever sells it to me cheapest. People already pay a premium for a good attorney, a good financial advisor, a good CPA, right? So I save money on the attorney, but I lose the case. I lost out. So, but in order to do that, you need to act like and present yourself as a professional. So the first thing would be, I would, whether it's Barry's, I forget his is CMA, whether it's certified mortgage planning specialist, right? You want to be able to talk about the tax not give tax advice, but be able to talk about the tax considerations of a certain way to do things. You want to be a master of those, the stuff we talked about. Where am I pulling the money from? What's the yield going to be over there versus where I'm putting in the mortgage? If you can't have those discussions, then you're left with just being able to be an order taker. So I'd say become a professional, not just in doing mortgages, but in financial markets, so that you can really give professional advice. And where I made a big leg up was when I became a master of the processing and underwriting side of things. Not so much processing, but underwriting. I feel like I know respectfully, the guidelines as good as most underwriters. I went to some of the self-employed, income calculation trainings that the mortgage insurance companies do. I still have the books for Fannie Mae, and I forget the blue books, what they're called, that I used to get them every quarter, and I would just read those things. It's not fun, but I just started to really master that. Early on, I was that guy, well, I'm going to sell, you're going to figure that out on the back end, right? And you can't do that. And I think that because if you start selling relationships and delivery, and then you have some deals blow up on you, you're done, you're toast. So, I'd say it's just up leveling to become a professional in both the advice that you're giving holistically and on the back end of the mortgage and what goes on to make sure that everything goes through smoothly, so that you can perform at the highest level.
That's That's seriously too much sauce, man. This is too much sauce. This is probably one of the most powerful podcasts that I think loan originators need to hear. Two guys that have never met before. We had a conversation for 2 minutes, thinking exactly the same. I've done 300 closings in 1 year by myself. You know, this is the exact, everything you said, I'm right in line with you. And that speaks volumes, man. Really appreciate having you on the show. Thanks a lot. Bill Mervin, everybody. Thank you. We'll catch you this week, man. Next time I'm in your area, we're definitely going to hang out.
I love it.
All right, my
Good
brother.
talking, man.
Have a
Thanks
great
for
day.
having me on.
Thank you, man, of course.
Take care.
Hey, thanks so much for watching the video. I hope you're enjoying it. If you'd like to see a bunch more content exclusively for you, sales, leadership, mindset, business, growth, click right down here below and hit subscribe for me. Every single week, you're going to get exclusive content delivered to you first. We also have a link in the bio with all of our products and coaching. We'd love to help you 10x your business and 10x your sales. And thank you for being a part of the community. We appreciate you.